What is up, all my stock market investors? That bear market talk. It's Shpena. I'm back again with another Cash App investing video, and I'm more excited than ever. I bought some Qualcomm today. Finally, claps to me, claps to me, and I hope that if anything, if you're doing anything, if you're saving, please take some of that saving and put it into the market. This is just these next few months and weeks will be, they're going to pay off for a lot of people. They're going to pay off for a lot of people because at this point, interest rates are at zero. That means your money in the bank is literally making nothing. I'm not telling you what to do. I'm just advising you what to look out for. So that's what I'm here to do today. And I'm going to talk about 3 companies to look out for. And before I get to that, make sure you hit the thumbs up on this video. A little thumb up real quick. Thumb up. Make sure you subscribe if you aren't already because it puts a big smile on my face. And I know y'all want to see me smile. All right. So this is the bear market that we've all been waiting for. Well, I've been waiting for. And like I said, usually Fridays and Mondays are the usually low point in the week. But also, what I have noticed is that I want to say 9:30 to 10:30 range is when usually things start go south for a lot of companies. So pay attention. If you're buying in the midday, everything seems to kind of be catching up midday. A lot of people have things to do in the morning, so the sales are coming in from the futures from the night before. People selling before the market opening, so that's why it starts down and then it just works its way up through the day. And I've literally tested that multiple times. There have been times where I've been like, nah, this is gonna go lower, and then literally after 10:30, see ya, it's up. And then I'm like, wow, like I missed out on some more JetBlue at an amazing price. It was at a crazy amazing price. So now I'm back on the lookout. But let's get into some companies for real. But again, before we get there, Trump has announced that this whole coronavirus thing might not be under control until August. Now, wow. Like, what could that mean? Like, what could that mean for the bailouts? What could that mean? It's going to get very scary these next few weeks, few months, actually. But some analysts said that he was seeming a little sarcastic. I don't know. Does he look like a hero if they get it under control by June or by May? When he predicted August, could that be something where all right, I don't even want to get into that part, that's too much, but let's get right into the first company. The company is DocuSign. Now, with everybody at home working from home, people can't even gather. I mean, let me know where you from, what they're doing, but in Massachusetts you can't even gather 10 people. You curbside pickup if you want to eat out. You can't even have a business meeting. So DocuSign is one of those companies that is going to benefit from this. And I think that could, even though people have already been using DocuSign, I think that people will start to use it even more just because they're going to realize the convenience. Oh, we don't even need to meet up for an hour and kick it and just talk. We can just have a quick 15-minute phone call. I can send you through the internet, and then you can just sign it right there wherever you are on your phone, wherever, and then boom, I get the paperwork back. That seems just like business future. I mean, if I'm a business, there's not a chance I'm mailing anything at that point. I'm going to send it to you digitally and have you DocuSign it. And the current share price for DocuSign is at $70.94, which I think is fair. It's fair. If it drops below, if it drops 5% below, if it drops 5 to 10% below within the next week or two, which I'd be surprised, but if it does, I mean, cop it. I think it's still a buy now, but hey, I get it, right? I get it. $70 can be a little high for some people, especially a lot of people that are looking for the lower stocks. But let's take a quick look at their balance sheet so y'all can see what I see, right? So DocuSign has this balance sheet here. They have assets, their cash and equivalents, 241 million, which is a nice chunk of change. So what I look at is the liabilities. Accounts payable 28 million, accrued liabilities 54 million, deferred revenues. So their deferred revenues is 500 million, and that's kind of brings their total liabilities to a 693 million type of number. And that sounds like when you first look at that, if you don't know what you're looking at, you're going to be like, what the hell? But deferred revenues is unearned income. Pretty much, it's money earned for goods and services which have not yet been delivered, right? So they're considered a liability until they are delivered. So, I mean, the balance sheet looks fairly good if you ask me. They can potentially have another 500 on top of that 241 if everything comes through like they expect it to. So do your research on DocuSign, but like I said, this one's a little obvious. And I mean, even if you got to buy one share to start off, and maybe you buy one share every 2 weeks for the next few weeks or for the next few months until this coronavirus goes away, I mean, I think that you'll be very happy. We might go into a whole new way of doing business after this, because I think that this is just going to scare people to the max. We're going to get into the second company of today's video, and that's going to be Disney. And now, I wouldn't have ever expected for me to even be talking about Disney in such a time. For one, they don't have a CEO right now, so it isn't looking good. Any company that is missing a CEO, it's usually a bad sign. But the market has created this volatility that has made chances for bigger companies such as an Apple, right? We all know what happens during recessions. Bigger companies come up because they have the cash to buy these assets that are kind of like going out of whack because of the things that are going on in the economy. And Disney is kind of seeming like one of those companies. It could happen. I'm not saying it is going to happen. It could happen, right? Disney has amusement parks. They get more than 50% of their income through streaming. You know, they have ESPN, they have the Disney app. So I'm sure they get. You can do your research, but I'm sure it's around 50% of their income comes from the streaming of all the content that they do. So they're good on that end. But their amusement parks are going to take a hit. Their hotels are going to take a hit. They got cruise lines. Those are going to take a hit. And they might be in a position where they're looking around like, who got the bag to pull us out of this? Like, and you know, you've heard some rumors of Apple. I mean, do your own research, but there's been some Apple rumors because Steve Jobs has ties with Disney, and Disney bought Pixar, and you know, there's people even within Disney that say till this day that if Steve Jobs was still alive, that Apple would have, both companies would have merged. And I think that if Apple has the cash, this might be a good buy for them, because they get streaming platforms, they get tons of content, and they already have Apple TV that they're trying to pop off. So merging Apple TV with Disney and ESPN content, and man, Apple will be on another. Apple will be in another world. Now, Disney's currently trading at like $93, I believe, and if it continues to drop, 5, 10, 15%, because numbers are going to be ugly with, their first quarter, second quarter is going to be ugly, right? If those numbers continue to drop and there's no signs of anybody doing anything, I think Disney might be a great company to have on your watch list because they have great assets. They're just going to go through a rough time. And I don't see the government bailing Disney out. That's just not going to happen. So that's that. But let's take a quick look at their balance sheet, right? Because, we're looking at these balance sheets right now. This is what I want y'all to start doing. Looking at this balance sheet, I see a cash equivalence of 5.4 million. That was their fourth quarter, I guess, was September 2019. Which, I mean, far away from now, right? We're in a whole different other place. But that was their cash and equivalents, which seems like a pretty decent number, right? But their liabilities, I'm sure, were holy moly, right? Their liabilities, total current liabilities, 31. That has to be billion. That can't be million. 31 billion. Yeah. Gotta be billion. 31 billion, I'm assuming. If I'm wrong, tell me I'm wrong. But yeah, they got assets. They're a well-known brand name. I don't think they're going anywhere, but I think that someone can swoop them up. So if you let their price get a little bit lower, drops 10, 15, 16%, it's a buy in my eyes, because if they get bought out, that price is going to shoot back up. I think they were in that like the 150, 140s at one point, maybe 120 at one point. So that could be a nice little flip on your money. And finally, our third company today is Datadog. Now, when I first seen this company, I seen it about like a month ago, and I'm like, Datadog. People love dogs. This company's probably going to be amazing. And then I realized that the company wasn't about dogs, right? So Datadog does monitoring and analytics for software developers. They give IT services, and they do their own thing. They do their own thing, and I think that they have tons of potential, right? They are currently up 17%, and you'll maybe see them go down a little bit here and there, but I think that they have the potential to hit, their current price is at like 34.12, and they have the potential to hit, high 40s or 50s, low 50s on their price per stock. And mainly just because of the business model, the infrastructure, and just how they're capitalizing on that market. I think that going forward, there's going to be so much more developed. Like, there's just going to be so many more software being developed, so many more different things. This cloud type of lifestyle, especially, with everything that's going on, and why not have a company like that doing your monitoring and giving you analytics on things that you can improve and get better at as a developer, because as a developer, I don't know if many of you guys know, and maybe you'll notice now when I break down this example, but why do you think that, you're always getting updates on your apps on your phone? It's because there's being analytics that are being run. They're monitoring each app, and when there's stuff that goes wrong, when there's bugs, well, someone, whatever app you have, they have someone that they're relying on to give them these analytics so that they know when there's an issue, or they know when they need to make an improvement, and then boom, you get your update, and now your update's available. So Datadog is, I don't have anything crazy to say about them, because I'm just going to be honest with y'all. I'm just putting them on my watch list. Like I said, I seen them a month ago, and then I brushed them off, and then I looked over them again. I'm like, this company might be a good one to talk about, because they have a good business structure, and developers, they don't need to work in a group setting. A developer can work from his house on his computer, and Datadog can be doing the analytics and monitoring from wherever their headquarters. So it can still work in this type of environment. But take a quick look at their balance sheet. We love to do that. because this is definitely what I want y'all to start doing. Just to take a quick look, even if you don't know what you're looking at, just take a quick look at their balance sheet. So Datadog, their cash and equivalents. This is December 2019. 597,000 or 597 million. Sorry. Oh, maybe it's thousands. All numbers in thousands. 597,000. But from a year ago, man, they done jumped over 300%. So that's a good sign. That's definitely a good sign. Let's look down at their liabilities, right? Their liabilities, because we love looking at that. I mean, wow. Their balance sheet, and I'm shocked. I was looking at this before, but now that I'm like looking at it now and doing this video, their balance sheet is nice, right? Total liabilities of 250,000. They got that double in cash equivalents. So that's a great example of what you want to look for as far as a balance sheet when you're looking for positives. If you have more cash than you have debt, well, that's a good sign. That means you can pay your debt. And if you can pay your debt double, that means you got some money to sit on. And now you will come across some companies that don't have a good looking balance sheet, but there's other things in play, like Disney. I mean, we can go back to Disney, for example. Their liabilities is wild, but their assets are strong. You know, some of their assets are strong. ESPN, Disney Plus, amusement parks, real estate. You know, it's some strong stuff. These characters. So that works out. Even though they have a bad balance sheet, it'll work out for them because if a company like Apple comes in and buys them, man, that stock price is gone. It's out of here. They're both Apple and Disney out of here, right? So, but this balance sheet looks beautiful, right? And that's why I select them in the first place. I was sitting there trying to think for a second, like, why did I even pick this company? And it was because I looked at their balance sheet earlier, and I just happened to forget the numbers, and their balance sheet looks good. So, like always, do your own research, my people. But this isn't a time to be scared. This is a time to take action. While everybody is being fearful, be greedy, right? Warren Buffett said it best. Make sure y'all hit a thumbs up on this video because it makes me smile always like that. Y'all see them pearly whites. And, subscribe if you aren't. And let me know in the comments what you're looking at. What's in your portfolio. People are always letting me know. People are always asking me what I think. But let me know. Let's talk about it. The only way that we're going to get through this and build generational wealth is going to be together. And we're more powerful if we're learning from each other. Trust me. All right? Y'all have a good rest of y'all night. Take it easy. I love y'all.